A friend of mine visited me at home and we got talking. Because I'm very passionate about money market and investing and all that, and I love teaching my fellow women. So I started telling her about money market fund. But Margaret looked at me and said, anytime people talk about investment, my brain goes on holiday. I go work, I don't understand anything. Because when you hear words like money market fund, mutual fund, fixed income, portfolio manager, equity fund, blah, 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 it can sound like somebody speaking in another language. But today, we are going to make it very simple. So imagine you have 100K. Instead of allowing that money to just sit around doing nothing, you want to put it somewhere that can potentially earn you a return while still being relatively accessible. And one of the options is money market fund. So exactly what is money market fund? So let me start by telling you the story of this Margaret, and I will divert and talk about. Imagine Margaret has 100K and she doesn't have need of that money immediately, but she also doesn't want to put it in an extremely high risk investment like shares. But she needs that money in a few months. So what will she do? Instead of putting it in random stock, because she doesn't understand that yet, she decides to put the money in money market fund. So what exactly is money market fund? Think of money market fund as a basket of money, and lots of people put their money into that basket. Margaret puts 100K, another person put 500K, another person put 5K, another person put 20K, another person put 20 million, another person put 1 million. All that money is put together. A professional fund manager then invests the pooled money into relatively short-term instruments, interest-bearing instruments according to the fund's rule. Depending on the fund, these instruments can include treasury bills, certificates of deposit, commercial paper, other short-term debt instruments which you may not understand. Now, don't worry about those big ones. We will break them down another day. For now, remember, your money is put together with other investors' money and professionally managed according to the investment objective. So let's even make it even more simpler. Imagine 10 children at school. They want to buy a big box of biscuits. Each child doesn't have enough money to buy the whole box, so they contribute. So one child brings 100 naira, another brings 200 naira, another brings 500 naira. They all put the money in together and they use it to buy one big box of biscuits. A similar idea behind the pooled investment. Everyone contributes. The money is managed according to the fund's rules, and each investor owns units representing their share of the fund. Simple, right? Margaret says, okay, now I understand the basket. Good. Because if you understand the basket, you're already halfway there. But who manages the money? Now, Margaret asks the next question. Wait, so I'm going to give somebody my money and just hope they don't go shopping with it? No, Margaret. That's why you don't just hand your money to somebody because they have a nice Instagram page. No. A legitimate regulated fund has a defined structure, investment mandate, and a professional management. The fund manager makes investment decisions within the rules of that particular fund. And this is why, before investing, you should check who manages the fund, who regulates or supervises the fund, what is the size of the fund, how many years have they been in business, what exactly does the fund invest in, what are their fees, can I easily withdraw my money, what are the risks involved. Please don't invest simply because your neighbor's cousin's friend said this one is paying over 30%, over 40%, over 25%. No, that's not how you invest. Your money deserves a better research than that. Now, let's get to the part Margaret really wants to know. How do I make money? Not only Margaret, every one of us, including myself. How do I make money from this? The underlying investment held by the fund can earn interest or other income. That investment performance contributes to the value or return of your fund, depending on how the particular fund is structured. So if Margaret has invested 100K and the fund earns a return over time, the value of her investment will increase. A money market fund generally considered lower risk than many equity investments, because equity investment is investing in the stock market, which can go up and down. But money market is invested in corporate debt, though the percentage return can fluctuate depending on the interest rate. So Margaret says to me, so you're telling me I can potentially earn a return without personally buying and managing treasury bills or other short-term instrument myself. Exactly. That's one of the attractions of money market fund. You don't need to do it yourself. You are accessing a professionally managed pool. Now, Margaret now asks me, what if I suddenly need my money? How do I get it? Most money market funds can be withdrawn after 1 month. I still need you to check the fund's term. Every fund has their term. So another question Margaret asked me, do I need to be rich before I can invest? Definitely no. Different funds have their different minimum investment requirements. Some may allow you to even invest 5K. Most of them allow you to invest small, like Stanbic IBTC mutual fund that I use. You can invest 5K and you can withdraw after 1 month. So you don't necessarily need millions to start. And this is something I want women to understand. Don't wait until you feel rich before you start learning about investing. Start by learning it. Start by following me to learn. Then understand what you can afford. Then invest according to your goals. Let's go back to Margaret. She has 100K. She decides that this is money she doesn't need immediately. Instead of simply leaving it idle in her regular bank account, which will you down nothing. She researches several money market funds. She compares the fund's investment strategy, historical performance, fees, minimum investment requirement, withdrawal term, who manages it, regulatory information, and the risk. Then she chooses an appropriate fund based on her circumstances. Notice what she did. She didn't chase the highest advertised return. She researched first, and that's what I want you to do. That's the behavior I want us to develop. Let me tell you, money market fund is not a magic money machine. It may not even beat inflation because some of these money market fund yields relatively 15%, some 20%, and some more, and it fluctuates over time. Money market fund is not a magic money making machine. So after explaining all these things to Margaret, she starts getting excited. And then she says to me, so if I put 1 million naira in my money market fund, I'll become a millionaire in no time. Please calm down. A money market fund is not an ATM that manufactures money. Your return depends on the underlying investment and prevailing market condition. And rates can change. Inflation can also reduce the purchasing power of your money. So the goal isn't to quickly double your money. Your goal is to earn some return as well as capital preservation. So does this investment make sense for my financial goal? That's what you'll be asking yourself. And let's talk about when money market fund makes sense. For example, you are building an emergency fund, or you are saving money for something you expect to need the money relatively soon, or you are saving money for vacation, or you just want to keep your cash, or you have cash that you don't want to expose to the larger price swings associated with the stock market. Depending on the specific fund and your circumstances, a money market fund may be worth your consideration. But remember, it's about matching your investment to the goal that you have. Don't use a short-term investment for a 20-year wealth building goal simply because it feels comfortable. And don't put emergency money into something that can fall dramatically in value when you may need the money tomorrow. Every naira needs a job. My advice will always be, if you're young, you can do money market fund for emergency, business opportunity, equities, and money for short-term use. But money you will use for future can be invested in other types of instruments like shares. So this brings me to the bigger message of this series. Ladies, financial independence doesn't start with having millions. It starts with understanding your money. You should know where your savings are. You should understand your investments. You should know what your money is doing. If you're married, please don't leave all financial knowledge to your husband simply because he handles the investment. Learn too. Ask questions. Understand family's financial picture. Because if you don't understand money, you can easily become dependent on someone else to make every financial decision for you. Margaret decides to make small change. Every month, instead of spending every naira that comes into her account, she decides to put some money towards her financial future. Some goes towards her emergency fund. Some may go towards appropriate investment. And she keeps learning. She's not trying to become rich next month. She's building a habit. And that's what I want you to take away from today's conversation. Wealth is often built gradually. Small amount, consistent contribution, good decision, time, and patience. So, my friend finally understands. A money market fund isn't a magical pot of gold. It is a pooled investment vehicle that invests relatively short-term instruments according to its mandate. It may offer a relatively conservative way to invest cash, but it carries low risk. And before investing, you need to understand the particular fund you're considering. If you're just investing, if you're just starting your investment journey, don't be intimidated by the big words. Ask questions, learn, read, compare, understand, and then make decisions that fit your goal. Because my dear sister, you work too hard for your money to remain a mystery. Let your money have a purpose. Let your money have a plan. And most importantly, learn before you invest. You can follow my channel and you will learn more. Now, I want to hear from you. Have you ever invested in a money market fund? Or are you hearing about it for the first time? Tell me in the comment. And if you want me to explain bonds in the same way, watch out for episode 3 of our series. 3 investments every woman should know. Save, learn, invest, and build. And please do your research. This is not an investment advice. Past performance is not a guarantee of future performance.